So before I move on, I just want to make sure, Leo, can you try sharing your screen? And if we can't share your screen, I'll have to get your slide deck. Just let me know if you have sharing abilities. You should have, but if you don't, and I'm not seeing your slide deck yet, so that's why I'm asking if you can share. And of course, I'm checking all my emails I said to send it to. Oh, you can share! Yay! Okay, let me do your introduction first, Leo, and then we'll have you reshare your screen. So just give me if you can unshare. Or just keep it like that, and I'll just introduce you. And we're going to go a couple of minutes early, which means we'll probably be able to break for lunch a couple minutes early, too. Give us a couple of extra minutes either side of that. Leo Ganeshan is going to share with us how he made $1 million profit, $1 million profit opportunity, rather, in multifamily investment on 3 months from multifamily, even before the deal closed. So an enthusiast on business who performs multiple roles globally, the founder and CEO in parallel at VCochu and of Canada Investors Club, by profession from being an accountant, financial advisor, mortgage agent, also a real estate and business coach. His urge to develop and grow in every field happened when he was very young. So 13 years of experience in financial services is evident, where he's also being a managing director at ISOP Friends and Friends Matrimony. In addition, the professional qualifications engulfs him so much as a holder of LLB and CIMA holder, on which his accountancy and auditing experience is another big leap on his career all through these years. I'm excited to hear what Leo is going to share today. Please help me welcome Leo Ganeshan, how I made $1 million profit in 3 months.
Thank you so much, Carl. Thank you so much for the great introduction. It is too much to talk like that. Of course, I'm so humbled, and I appreciate your introduction, because people may understand what we had been doing so that they can simply follow. For that reason only I put some information like that. Other than that, there is nothing to talk much about big, because everything comes from somebody, so we learn from somebody. That is the only reason I want to talk about this $1 million opportunity, how my team and myself did within few months, so people can take the same action and they can come back to us also and learn and do that, especially in this COVID time as well. So I can simply start for the next 30 minutes. Any questions, of course, they can put it in this chat box. Then Carl will be taking that after 30 minutes time probably, and of course even otherwise later we can talk to Kennedy or somebody. Kennedy is the one who introduced to this event, and of course he's a friend of mine. I'm so honored to speak in this stage. Thank you. So I'll start this presentation so you can learn a little more, and please take some note, then it is easy for us to talk later in a day or even in this presentation right after that. Okay, so I'm the founder of Canada Investors Club. We started this about 3 years back, and of course I am a multi-business owner. I have a software development company, social media and everything, but I start all of them only when I lost my job in 2009. I got laid off, and after that I really want to get any more layoff, so I decided to start my own company. I became a mortgage broker like that. So I'm going to share a little bit of my story as well, then it is easy to connect how you can do that too. So I go to the next slide. So this is just what other business I'm doing. Of course I don't want to talk much about it. About me in relation to this real estate, of course I'm in this real estate for the last 15 years. I'm a mortgage broker for the last 12 years, and I have enough experience in single family and multifamily. Originally I started with single family, and now we moved to multifamily. And of course I had been working from Canada, and of course I'm investing in Canada. I don't go out of Canada because I cannot see. I simply travel about 6-7 hours up to Hawkesbury. I'm going, but not more than that. And I invest only in cash flow properties nowadays, and I don't speculate and do business, because speculation is good one way if you are lucky. So I don't want to depend on luck, so I never speculate. I find some other parameters to find out if a property is good. So as a real estate investor, multifamily and construction is my passion. And no money down is my strategy, because if you don't have money, many people think they cannot come into real estate investment. It is not true. They have to have something else. So I'll talk about that one. So no money down is my strategy. All these single family detached houses what I bought, around 14, were like that. Without my investment, I bought 14 single detached properties. And after that, we bought about 42 multifamily units in the past. And for this year, we have a target of 100 multifamily units. Already, we have to have about 76 more to go this year. And buy, fix and rent is our main style, because we can immediately force some appreciation. So I can talk about my experience and my team experience in purchasing under market value properties, because when you go for the market and buy under market value properties, the advantage is the appraisal value will be much higher than the purchase price, so it is easy to finance. Second one, we have enough experience in financing difficult mortgages as a mortgage broker, so it is helping me to find the properties and finance the property of myself and my team. Third one, we have enough experience in fixing rundown properties and tenant eviction and appeal and everything. Of course, I'm not a lawyer, I'm not practicing as an accountant, but those knowledge help me so that I'm easily able to talk to my lawyers and accountant and do these things. So we have enough experience from our own properties as well, tenant eviction, appeal, and even some other clients come to us for litigation arrangement with the lawyer, or even power of sale processes, so that I can connect them to the lawyers so they are able to do it and save their properties. So how many of you are looking to increase your current income or to find an additional income source? If that is the case, congratulations, this is the right place, and real estate investment is the right choice, I would say, even in this pandemic situation. So if you are in that category, you are in the right place. Keep some notebook so you can do it. Just imagine if you can solve all your financial problems, and if you can have a complete freedom on work, and if you can work only 4 to 6 hours a day with a self-managing company. You can write down the word even self-managing company. Many people try to work 15, 16 hours. Even I used to do that. But now I have about 30 people working, but at the same time, that is running by itself. So I don't need to spend a lot of time day by day. So that is the ultimate goal you may have to have. And of course, if you want to have great monthly cash flow, if that is the case, definitely real estate will help you. And I'm going to tell a little bit of my story so it may be easy to understand. So I'm a multiple business owner, but at the same time, a real estate investor and coach. My book going to come as Secret Millionaire very soon, but for the last 3 years, it has been taking time because I was practically working more. This is my family, a good family, supporting a lot, but at the same time, in previous days, I did not spend a lot of time with them. When they are there to help me in my business or whatever, I was not there with them because I was busy most of the time. Then I understood the mistake and I was able to correct that too. So 12 years back, it was not the case. I showed you many properties and businesses, but when I lost my job loss, then after that I lost a business, so business loss, again some real estate loss. I bought a first property and I lost that first property. Because when I lost my job, I couldn't continue that monthly payment of my second house, and the first house was on rent and the tenant did not pay me. So he started fooling around with me, so I couldn't evict him. I couldn't continue doing the mortgage payment. Every day I go to him and beg him to pay the mortgages, because that's all I knew, because I was fairly new to the country also. So I didn't know how to evict him and I didn't have enough money. So at last I lost the property, and again of course there's a shocking death in my family too. That's my wife. So again I got married. Thank you for my current wife. She is really doing a great job for me and my kids, and of course now we are again doing better things. So I came to Canada in 2004 with just $3,000, and I was doing 3 jobs. One, a newspaper delivery in the morning, 2 a.m. to 6 a.m. I had to do that Monday to Friday, and again Saturday, Sunday as well. Then second job is an accountant job that started from 7 to 3 p.m. After that 3:30 to 7:30 or 8 o'clock, I used to do courier delivery, and it is for a bank. So I had to go 3 different locations and collect everything and give it to the collection center and come back home by 8 o'clock, then sleeping up to 1 or 1:32 max, and then I had to go back to the same round. So this is how I was doing my business and 3 jobs. Business means I had a small clothing business, and I was having small accounting business. So 5 different things I used to do in the same time frame, which was very difficult, but I was determined to do that. Then I bought 2 properties within 3 years in Canada, and of course out of that I lost one, I told. So I had to recruit 200 people in the last 10 years, and of course I had to work 15 hours or 16 hours each day because I had some offices in different places, Sri Lanka and India as well as Canada. Of course I spent a lot of money in personal development, more than $300,000. That is how I was able to learn my trade and get the experience and support everything, because just my own education or background qualification did not really help me. The personal development is the main thing, and I would say even only thing which helped me to go to the next level. So I didn't have enough vacation, no family, and every day I was working. Unhappy mother, because she used to hold me saying, you are taking too much time in your business, this is not the way. But I didn't listen to her. Likewise, my wife was not happy, kid was not happy, because I spent a lot of time. But after that, of course, gradually I changed everything. As I told, I had few businesses, and now we have about 30 staff, and we are planning to get about 40 staff by end of this year. So my question, how serious are you to get to the next level? Because it is not that talking, I want to talk about myself, I'm going to put you in that place, that's the reason. So do you think that real estate investment can take you to the next level? If you think, you can simply say yes or whatever, because it has to be interactive, but Zoom is not that, I'm not familiar with that great interaction with Zoom, so I'm just expecting some questions in the later stage after 30 minutes. And raise your hands if you think credit, down payment and income is equal to real estate. Many people think that yes, we need to have a good credit, we need to have down payment, and then we have to have income, then only we can go into real estate. Many people simply think that, and they stop doing everything towards that. But actually, creativity and network is equal to real estate in my understanding. Because when you find a good property, you need to have some creativity, and of course you have to have people around you, the network, the right people, then you can buy any number of real estate. So that is the reason I was able to do it. So can you please write down the 6 steps in real estate if you want to take this real estate as your next income making opportunity? If you have pen and paper, please write down, otherwise I can give those steps from my understanding, which used to help me and which is still helping me. Yeah, the first step is you have to find out your current net worth. In my understanding, current net worth means, when you sell all your properties and everything, assets, and you will take the money, and then you can pay off all the debts. After that, how much you have in hand is the net worth, because that net worth is very important for you to the next step. Because if you want to go to financial freedom, if you want to get the financial freedom, then you should know how much money you should have as a financial freedom number. We call that as a second one as find out your financial freedom number. I simply call that a financial freedom number, because if you have $1 million, if you can get 10% return, then every year you'll be able to get $100,000. If that $100,000 is enough from the day you retire till your lifetime, then of course that is a financial freedom number. That there are 2 ways of calculating, but that we can talk in another day. But you have to find out how much money you should have to get the financial freedom, and by which year. Because if you are 60, already you are close to the timeline. If you are only 20, of course you have 30-40 years probably. So third point is you have to write down a plan for your real estate investment. I can simply put even as a retirement plan, because the reason we go into real estate is to have a better retirement. It is not that after 60 you can even retire by 30 or 40, whatever the day or year or age you are planning to. So you have to have that idea. Then the fourth step is coming, find an inner circle and accountability partner, because that's what I told, net worth and network. So that is very important. So you have to find out the inner circle and an accountability partner, which is, then it is easy for you to move forward. And the fifth one I'm telling, execute the task from number 3. Number 3 is the real estate plan. So when you have a plan, you may have some steps over there. You have to take the first step out of that. That is very important. Many people learn everything, go to next seminar, like everywhere, but at the same time, they know exactly what to do next, but they don't take the step. So I would definitely say that is very important. That is the reason on top of that I put the accountability partner. If you cannot push yourself, somebody will push you. That's the reason. Then the sixth one, of course, find a coach or mentor. So these are the 6 steps. I would simply say, if you really want to go and take this real estate investment as a business or income making opportunity, if you want to just do it as a part-time or a hobby or a small income portion or expectation, then okay, you can do it in any manner. But if you want to take this as a serious business with to do a bigger job and get a lot of money, then you have to have a plan like this. It is my plan, but you can do something, but at the same time something similar to that. But the smart people will start this one from probably the number 6 to 1, because they don't want to wait for a long time. So they don't want to simply find out everything and go. They will simply find a coach or mentor. They will simply listen to them. Then they will tell, the coach or mentor may tell them to do something. They will right away do that without even asking any questions. Then of course they will know what they are lacking. Then they will find an accountability partner, and they will find a network, and then they will write the plan, things like that. Then they will understand, okay, how much they need as a freedom number or whatever. Then of course they will identify their current network. There are many people, they simply kept working. Suddenly after 1 year or 2 years, their accountant tells, hey man, you are already passing the $1 million or $10 million net worth or what. At that time only they understand, oh my gosh, I passed that. Up to that time they didn't even care about that, because they were spending time on working alone. So if you are in a hurry, you can even start from 6 to 5 to 1. Otherwise you can go in the order. Either way, it depends on you. Right. And if you want to learn more, of course, we are putting some classes as multifamily master classes, and invest in some other events, investors meet or business master. You can get all those information later in Eventbrite. Okay, so I'm going to talk about my vision so that we can go to that right topic, because we talk about how I made, or how my team made $1 million profit opportunity. So before that, I want to tell my vision in this real estate investment. Making real estate investment as a safe, secure, and simple passive income opportunity for busy Canadians for their retirement. This is our mission in the real estate investment business. And of course, for that, our mission for this year is, of course, buy 100 apartments or 100 units in 2021 with no money down or other people's money. We call that as OPM. And of course, whenever we buy properties, we look for these cash flowing properties, under market value properties, and we look for buying property opportunity with vendor take back or OPM, other people's money. And of course, the next one is I always look for some renovation potential immediately after we buy. And of course, then the price appreciation should be there. Some area appreciation is very minimal, then I don't normally go there. And the other one we call mortgage payoff. That means some people buy properties and keep a mortgage as a private mortgage. If it's a private mortgage, of course, definitely they are not going to pay off any of your mortgages. So the loan amount going to be stay there forever, which is not a good idea. So I always try to find and fund the property through a bank mortgage or a mortgage plus principal plus interest mortgage. So automatically somebody who the tenant will pay the mortgage. So in 10 years, 15 years time, you may have a free and clear property without you paying the mortgage. So these are the steps that I look for when we buy property. So this is our mission. Next one, of course, our goal is to find out some cash flow properties under market value, and like that, so I explained that. Our strategy is keep the investors as our highest priority and give highest return to our investors, and always be transparent. And our values are, of course, investor satisfaction, customer satisfaction, and staff satisfaction, because when our staffs are happy, they are able to do better job for my clients and customers as well as investors. Yeah, I'm going to talk about that $1 million, how my team made that one. Okay, so a few properties we bought this year we are going to show, so that you can understand how it happens, so that you can exactly copy this process and you can definitely make a lot of money or reasonable amount of money. If you have any question, you can talk to my team or myself later. So great cash flow in commercial properties. That is the one we are normally go for. And of course, we were able to do some $250,000 profit or the market because we bought the property for under market value. So this is the first property we bought. It is in Hawkesbury. It's the price and details we are going to show that one in the next slide. You can see purchase price was $845 and the market value is around $1,150,000. We were able to negotiate a vendor take back at 5% for 3 years from the seller itself. So that helped us to do the mortgage, and we were able to do the mortgage at Royal Bank at the rate of 2.64. It's a 5-year fixed mortgage. And of course, immediate profit is about $300,000, but you can understand this immediate profit is a capital gains. So capital gains means, of course, you cannot simply take it right away. You may have to sell that or you have to do a refinance. But we have no plan of doing that right now because my investors don't like to do that. So second property we bought in the same area, 677 Hawkesbury. It is having around 6 residential units and 2 commercial units, and there are some more potential to do some 3 more residential units over there. Purchase price was $598. The market value is around $1,150,000. The reason is because in the commercial property, the valuation comes from the net operating income. We call it NOI. Net operating income means we will collect all the gross rentals or whatever income, then we will pay off the payments other than mortgage generally. So the net one is going to come as a net operating income. From that we will pay off the mortgage. So before we pay off the mortgage, we will see the NOI. Then we can multiply that by a particular number and come back to the market value. So those calculations we can talk later. So that is how we identify the market value is about $1,150,000. So there we did not get any vendor take back, but we try to get some OPM, other people's money. Some investors brought some money for $150,000. We were able to give 15% for 3 years, and of course the bank rate was about 3%, and we are working on that one. So immediate profit within few months is about $550,000. You may wonder, if it is possible? Yes, it is possible, because sometimes some real estate agents don't understand how to price or how to market the property, and they do some wrong calculation. So based on that, price came down. That's the reason we were able to cover up, buy the property for lower price. So this is the third property. We finalized the property in March, but closing going to be June somewhere. So this is a property in Ottawa. It is already making about $115,000 monthly annual income. There are 3 tenants, and at the same time purchase price about $1,350,000. But it is an exclusive deal because the first deal fell through, so the real estate agent was able to give that deal to us. So we were able to buy that as an exclusive deal. Actual market price about $1.7 million, because there are some other properties already sold for that price. We were able to negotiate about $250,000 vendor take back for 2 years at the rate of 5%. And other people's money, some coming for 50% equity partnership. And we are taking another $200,000 second mortgage at the rate of 15%, because it is not really going to be named exactly second mortgage because there is a vendor take back, so it is the third mortgage actually saying. So at the rate of 15% for 3 years. So the bank, we are expecting about 3% because the closing is going to be somewhere in June. I expect the rate may be around 3% and for 5-year fixed. So the immediate profit is about $350,000. More than that, that property has an opportunity to build some apartment building or townhouses, 5 townhouses behind, because this particular property is about 26,000 square feet land. So it has a great opportunity. The other property that is about 1 hour from Ottawa, it is a townhouse project. It is already having a building permit for 7 apartment building. We are negotiating with the seller, and he is going to turn this property as a townhouse, and he is going to get this permits and everything to build. So once that comes, of course, this is the price going to be construction cost plus land cost is around $3 million, and potential sales proceeds of the 7 townhouses will be around $4 million. So definitely the profit would be around $1 million, and at the same time it is going to take about 6 months to 18 months. If the condition changes or COVID situation changes, we don't know. Other than that, potential profit is going to be within 1 year's time, around $1 million. So this is how we do this one. So here a second mortgage is coming for $300,000, and 50% equity partnership we are bringing, so that is around $300,000. With that we will be going to bank mortgage for the construction. Land we are going to buy outright. So I talk about 4 different properties from January to last month or this month, April. So first property around 350,000, second about 550, and 350 third property. The fourth one, of course, it's going to take about 1 year or what. So it's going to be giving around $2.25 million profit approximately. So the way we fund that property is investors' profit is 50%, because whoever bring the money, and the managing partners, they also sometimes bring money, sometimes they bring their knowledge, because my team has engineers and finance person, things like that. So their profit share is 50%. So that is how we made about $1.125 million profit in 4 months' time. So there are a lot of things we can talk about this multifamily opportunity, but you should get your own questions. Then you should look for the answers. If you want, you have to find out the right team or network. Through that, you can simply start working, and you don't need a lot of experience. You don't need to go big right away, but at the same time, you can do it. Because even being an accountant with 15 years of experience, when I lost my job, I couldn't carry my house. That's a rental property. Still, I couldn't carry that. I lost it. So you should be able to find out people around you so that they can help you to support and take care of your needs. Anything happens. So I told you, you can do it too. How can you do it? There are 2 ways. Find a managing partner and join his project as a managing partner. Second opportunity is just find out some managing partners who are doing real estate investment and join them as an investor. And I already told you that if you don't have money or any other things, you will still have some other opportunity. You may find some people who are willing to sell a property, or you may know somebody who is already having money, or something like that. You can find out and try to be part of that opportunity or the investment process. Then you will simply get some more opportunities. Through that, you can become an investor, you can become a managing partner, and then you can do a lot of things. But as I told, the potential risk in any investments, you may lose the profit share sometimes you may lose the initial investment, sometimes you may lose everything. So that is a reason we always talk about accredited investors and non-accredited investors. Generally, when we go for investments, we look for accredited investors because they have the knowledge and they have the strength to bear with some losses too. So it is easy. So as per Canadian law, we have to be very careful, and we generally go for accredited investors. And of course, non-accredited investors, there are so many other ways we can follow. We must follow all the rules, Canadian security rules, then we can raise some finance. So how can you avoid this potential risk is a question. So I put some information on that one too. First one, of course, you have to have a clear exit strategy for short term, and again you have to have a clear exit strategy for long term. The third one I always tell is always you should have a plan B. If you are the major investor, of course you have to have all these plans, but if you are just participating with some other people, of course at least you should ask these questions, the investors. Then if you are convinced, then okay, you can talk to your lawyers, and then you can get more information with your coaches and mentors, then you can go and invest. Okay, how can you avoid this one? Other easy way is to find a mentor or coach ASAP, because a great mentor will help you a lot so that he can help you to avoid many risks like this one. And at the same time, your inner circle should be big enough. Even previous speakers, Suzanne and everybody talk about that one, because if you have more people around you with knowledge, you can do a lot of bigger things. So these are the mentors and coaches in my inner circle from which I was able to raise myself to the next level. Robert Allen, he is one of my mentors because he's we call him as a no money down guru, and of course I learned a lot from him, and Jack Canfield and Raymond Aron. Of course I was inspired a lot with them because they achieved big successes. These are my friends, Sunil and James McNeil, and my Shark Tank guy. Thank you. But I'm going to show about little mistake that I did during my initial stage, so that you can also understand that and try to avoid those mistakes myself. First property I bought in a condominium, but at the same time I didn't have enough money, or I didn't know the knowledge how to evict a tenant when they don't pay the rental payments. I missed that opportunity and I lost the property. The property value currently may be around $600,000 or more. So I lost a big number, but of course I had a good learning out of that. Second mistake is, of course, I lost about $115,000, me and my partner, on a commercial strip plaza, because we did not go through the documentation properly and the agreement was not good enough, but we simply pumped the money. After that, on the closing date, other investors did not bring their part of their investment, so we couldn't close the deal. I arranged the mortgage for them, but at the same time they promised to bring the money, but they did not. So we lost, actually me and my partner lost that much money in that. Third mistake, of course, we tried to lend about $30,000 on a promissory note, and it did not come, and of course we did not have enough time to follow up with that, and we lost that money. Fourth mistake, of course, we lost about $100,000 in a property, in a wrong property, because we did not do a full due diligence. For example, that property was in a floodplains. We thought we can build townhouses, and at the same time we did not check with the TRCA. After we bought only, we checked that one, of course, because since it is a property in a floodplains, they did not allow us to survey the property. We checked with other city and everywhere, but by mistakenly in a hurry, we did not check in the TRCA authorities. The fifth mistake, of course, I lost more than 10 years and millions of dollars of opportunity just because I was doing alone and doing everything myself initially. For that reason, I couldn't move faster, grow faster, and of course I lost a lot. And after that, my mentors, and I read books and things like that. I really love to recommend this book, Gary Keller's book, One Thing. Once you read that, you will understand many things. And thanks to my coach, and he insisted me to go for a chief operating officer, again as chief financial officer. Then I brought acquisition managers and personal assistants and everybody, so it is very easy to move this travel faster now. So that is a mistake. I should have done this one long time before. Okay, if you have any questions or if you want to learn more about multifamily, you can check with Kennedy Iden. Thank you so much, Kennedy, for your opportunity. And at the same time, you can even contact us later. Then you can get more information about this type of opportunities. Thank you so much. Thank you, Carl, for your time. And thank you again, Cheryl. You are the one coordinating with me all these arrangements. Thank you.
All right, let's give Leo a hand. Let's give Leo a big hand. Leo, I'll get you to stop sharing your screen too there. Big round of applause for Leo. And remember, you can use the reactions or give the A's in the chat. I'm going to do both because I can. Okay, there it is. There we go. Awesome. Leo, that was fantastic. Thank you so much. If you have a question for Leo, I was making some notes, Leo, and there's a couple things I want to ask you, but you've actually answered some of the questions that I originally started to frame. So,
okay.
Great presentation. Phenomenal, very thorough. I still think I have a couple of questions I want to ask you, though.
Thank you.
Raise your hand, or you can even pop your question in the chat if you have a question for Leo. Leo, I wanted to. It's funny because I'm going to walk through some of the questions I asked you. How easy is it to do this on your own? You said, don't. Get a partner, get some guidance, get some coaching. So that answered that question. So thank you so much. Partner, invest. If you're just starting out and you're looking at maybe being a partner, like you mentioned that if you don't have the money, there's still ways that you can do it to move forward. Or if you have a small investment. So if you're just starting out, so say for example myself, I've never done this before, I could probably come up with a little bit of cash. I don't know how much, but if I'm just starting out, is there a percentage or is there a dollar amount if I'm going into or being an investor with a particular property? Is there a certain amount, or does that depend on the actual property itself?
Yeah, that depends on the property, or that depends on the investor who you are going to work with. And of course, if you show more interest towards this real estate investment, and if they think that you are valuable, even with 10,000 or even 5,000, even without even any deposit, people may take you, because you can bring many other things. There are so many opportunities that you can find some good properties and refer that to the investor. Or the way you can find some other investors who has money, but they have no idea. Because even yesterday I talked to somebody and they have about $500,000 in RRSP, but they have no idea of getting that to a different investment, because they thought they bought the house first time home buyer. So now that RRSP they cannot use it. But I told no, there are so many opportunities. We can use that RRSP or even tax-free savings account for investments like this. Even 10%, 12%, 15% return they can get it. So you don't really need money in my case, but at the same time, if you have at least $5,000 to $10,000, there will be a lot of investors. They can consider you because they have traveled through that situation.
Right, right. So they've been down that path, so they know that investors, when they're coming in, they're probably not coming in with a large pool of money, and that, depending on their interest level, it might grow and expand. I think that's probably the goal for most people, is to not just do this once. It's not like a flash in the pan. It's to do it multiple times like you've done. And thank you, by the way, for also sharing the mistakes that you've made along the way.
Yes.
Because I'm looking at that going, I'm thinking, okay, well, that was a mistake. And I think the biggest takeaway from that is get some guidance, get a coach, get together with somebody who has the experience and has already made the mistakes. That way you're not making them.
That's true. Definitely, because we spend a lot of time to resolve the problem that we don't know how to resolve. So if you ask, it's a simple answer. Right away people may say yes or no, but we are taking months or years to answer the question. So it's not worth it. But for the previous discussion, because I have to tell another disclaimer again, because generally people can advertise for accredited investors, people who come with $10,000, $5,000. We cannot simply take it, just a third party unknown investors. If you are a friends and family, then you can go with them. They should have a good relationship as a friend or family. Then they can go with 5,000, 10,000. Don't go and find out another investor who is not known to you at all. That is totally against the law as well.
Right, gotcha. A couple of things I wanted to cover, and I don't see any other questions coming through, but if you do have a question for Leo, then by all means pop in the chat or raise your hand. And by the way, if you want to connect with Leo after today, Leo's going to put his information in the chat as well. I think it was on his final slide there, but Leo, don't hesitate to put your information in the chat too, so people can access it directly. You talked about the financial freedom number and the date, and I know that was part of the processes that you were going through from okay, here's what you need to do. What should that financial freedom number, obviously the date is part of it, but what else should it include? Should I be looking at the lifestyle I want, how many times I want to travel between my retirement date and the date I think I'm going to die? What are some things it should include?
Yeah, if we are to calculate the financial freedom number, of course, it depends totally on your lifestyle and whether you are going to be alone with your girlfriend or how many kids or grandkids. Like that, you have to find out and you have to figure out how you want to live after 10 years or 5 years or whatever time onwards. Based on that, again, bigger question, where are you going to live? If you are retired, in the COVID situation, many people are moving far away from Toronto and go for a 50%, 30% price properties. Or otherwise, you can even go out of even Canada. So based on all those factors, you should identify how much you may need. Second question is, you should identify those money, where are you going to invest? At what rate probably you are going to invest, in 5% or 10%? Those are the major factors. Some people don't want to invest. They want to keep the money and then start using that money. It's a bigger problem because we don't know how long they are going to live. So they should have a lot of money to do that. And it's foolish because now we know the inflation is very high and the money value is coming down faster. So after 30 years, 20 years time, the money that we have is 1/4 or 1/3 of the value. So it's not going to be enough to cover the purchase power. So based on that, you have to do the math, and then we have to talk about where you want and how much you have to have at the time of retirement.
So we definitely need to take those steps and not just say, well, I think it's going to be $1 million or 1.5 million, and then I'll be fine. We need to look at it. So the date is, number one, the date's important.
True.
How much money is that going to be? But then also, what kind of lifestyle do you know, where do you want to live? You mentioned a lot of people moving from the bigger city, Toronto, Ottawa, Vancouver, living in smaller municipalities. I'm in Gananoque, and there are a lot of people looking at opportunities in Gananoque for living and selling off their properties in large cities to live here. Well, the living expenses in Gananoque are far less than living in a place like Toronto. But all of those things need to be considered, or like you said, even living overseas. So great insight there as to making sure that you just don't pick a number and go, maybe $1 million. Like you really need to, as much as you can, chunk it down and say, okay, well, this is the lifestyle I want, and I do want to live in the Thousand Islands. That's where I live. And I do want to have a boat that's not just a little, canoe or a pedal boat. I want to have something that's 40 feet long, and here's the price. So you really need to go through those steps, and I guess you could call it like just dream. Like what's your dream? What's your goal? How do you want that to look for you?
Definitely yes, because it is one time they have to do the calculation, and after that every year they have to go back and revise it, because their change expectation situation may vary a lot. So they have to revise that every time. That is very important. In Gananoque, of course, we also invested on 6plex property last year. So it's another joint venture opportunity. We got it. It's a good location. I love that place because it's closer to 401.
The thing I wanted to ask you is, from a starting perspective, the market's pretty wonky right now. And again, maybe this is more not the discussion to have right now, but with the market being wonky right now, how easy for it is an investor to get in with, numbers, going so much over asking. I mean, you're talking about things that are under market value, but do they stay under market value, or do people get wise and go, okay, well, no, it's now going to sell for more? What's the if I'm coming in, sorry, go ahead.
Yes, no problem. So I understand. So the under market value is not a real market value. It is only for those people who can see that type of properties. They are going to capture it. So once it is in MLS, if it is under market value, within few hours it's gone. We bought one property for $185,000 few years back, because within 1 hour I gave the draft and everything. Of course it popped into MLS, but within 1 hour I gave the draft, no condition, everything, $1,000 more. So I captured. Otherwise, of course, we had to go in a different channel without real estate agents. Then you can still find out. Market may not stay like this. Of course, now there are big questions about ups and downs. But at the same time, if you think real estate is a long-term game, definitely it will help us. If you wait to buy, it is risky. If you buy and wait, it is perfectly okay, whatever price it is. That is the reason I always try to buy under market value. Then for sure we know it's not going to be the same all the time. Second thing, there are so many other factors we have to look into, because if the population growth is 0 or negative, then we cannot expect big price up. So those are the other things that we have to find out. Then only we can buy these properties. And sometimes people don't like to go for smaller cities because population don't grow bigger. Then there is no much demand. But even that is also changing away because investors are going everywhere. So it changes a little bit. Yeah.
Wow, Leo, phenomenal discussion and phenomenal insight. Another round of applause for Leo Ganeshan. Thank you so much for sharing your insights and being a beacon of hope. And I loved your story, by the way. I loved how you shared your where you've been from. So people just don't see you as, hey, this is easy, you can do it. They know that you've been through this and you've been through the trenches and you've walked through it, and you're here to help people. And thank you so much for giving of your time today. Pop your information in the chat for anyone that wants to connect with you after today.
Okay.
And yeah.
Thank you. Thank you so much for your time. It's a great opportunity, Kennedy and Carl and Cheryl. Thank you so much. Have a good day, guys.
Awesome. Thank you so much, Leo. It's 11:25. Our next speaker isn't going to be on until 12, so I'm going to take the opportunity to call a break now. So we'll break till 12, so you got an extra 5 minutes for your lunch to heat it up or go for a walk, get some fresh air, whatever you need to do. I'll be back at about 12. I'm going to actually share my screen and put this slide up. There it is. I think it's this one. Be sure it's this one. No, it's not that one. Yes, it is that one. So we have this on the screen, and we'll see you back here at about 12 o'clock. And yeah, our speaker after lunch is going to be Nadine Lajoie. Looking forward to that. So again, thank you so much. Take some time to do what you need to do, and we'll see you back here right around 12. Thanks, everyone.
the video?
I didn't get any.
Mm-hmm.
I got like a few emails for other stuff, but those were the ones I was already in, like Motley Fool. Wait, are you muted?
Mm-hmm.
You're muted, right?
Yeah.
Okay, so I just got like a random videos from other people, but nothing new. All of them was like from Investopedia or Sharon Sheldon, people like that.
Let's do this club. Yeah, come.
How'd you realize this doors are completely different color?
Mm-hmm.
This doors are completely different colors, like cream.
Mm-hmm.